Morning.
Good morning.
Morning, everyone. How are we all doing today? Thank you for everybody that's joined. Usual way, I've got some of my technology. Don't give a Welshman a computer. That's the way forward, Michael, with this. So I've just let a few other people join in. So thank you, everyone, for coming in. This is my Jeff Stalin impression, whoever's into their football. I don't think it's Jeff Stalin anymore as well, showing my age, but this is me trying to manage the room today. What we're going to be doing through the day as well is, or not through the day, I'm not taking up that much of your time, but over the next 45 minutes is opening it up. We're opening it up to any questions that you may have to Michael Stratton himself about MS lending, about the market as much as possible. He will look to answer that. I'm just here to be the main interviewer today to go through all the areas. And we'll be putting some polls on as well when I remember to put them up, just to ask you some questions. I think I'll do one of them in the first few minutes, midway through, and all that. And I think it's really important that we have this today from our point of view because I don't want to just be another bridging um, presentation. Just we've all been on them. I've probably presented them myself, where I've said about how amazing just a bridging lender is. But I think it's really important to understand what the journey is and understand where MS Lending Group actually helps with the market. And, we really want to find out from Michael himself why he started the business and different areas that could actually help him get up to and beyond, and all of us to 500 million plus in the market. Why we can be fast, flexible, and reliable, and they're not just lines, they're pillars to everything that we do. So, thank you for coming on and giving up your time today, Michael.
No, absolute pleasure. No, I was wondering when you were going to ask me, to be honest with you, but yeah, finally got the nod. I've not been asked for any chippy and chat yet, but
I knew Chippy and Chat was coming then. Yeah, you can tell. I can see what you eat for lunch. It seems a lot more healthier than Chippy and Chat.
I'm
So,
trying at
I,
the moment. I am trying, but I do like a chippy.
no, it's really good. So let me just find out that everybody, yeah, we're filling up quite nicely in the room now. So once again, thank you for everybody that's going on. I want to talk about Michael for this because I know that busy man that you are, and you pay me to be really busy as well. We haven't had much chance to jump on with some of the areas. So just for everybody else, I've already set the scene, but I want to, from a founder themselves, everybody can always listen to me really talk about why MS Lending Group, and I love managing sales teams, but you're the founder. So the founder story and why you set up MS Lending Group, I think we'll go into that. A bit about the growth journey because there's a lot of lenders that come to market, but I think that first 5 years is really important just to set your scene and the foundations for longer. We will touch upon the three pillars as well, the culture. I will talk about some of the awards, but we'll touch upon them. I think it's the culture and the team and everything that we got coming that will allow us to aim towards future awards. They're the icing on the cake. So I'm sure you'll be able to give some teasers to what we've got coming as well, which I'm sure a
Mm,
lot of the brokers will want to know about
awesome.
as we
Yeah.
go along. So as I said, thank you for your time for. Let me start off, and this is not me being a journalist, yeah. So we know it's a safe environment with the all the audience that we've got there. But when you started out MS Lending Group, and you can tell us the time around COVID that was, but what problem were you looking to solve really with starting up MS Lending Group?
I suppose for me, there was always an element of problem solving. I think as a lender, as a new lender, you always have to have that identity to know what is it that, where is the gap that a broker currently can't service, or I suppose an element of the market for clients to tap into that they can't really tap into. But I suppose for me, it was a bit different. The landscape was changing. It was sort of right at the start of COVID. Um, my previous employer, which was one of the largest sort of non-bank lenders in the UK, they were changing what they were doing, pausing funding, new business. They're having to manage the new world of payment holidays on mortgages, etc. Lots of staff were being furloughed. So the honest answer is there was an element of trying to solve for, which I'll talk for in a second, a gap, but there was also an element of, whilst most people thought it was a crazy time to be sort of setting up any business, let alone a lender, there were some positives of that timing, which were exactly that: the fact that a lot of other lenders were in the process of licking their wounds, having to look at the current processes and governance around how they were managing this new world that we're in of sort of mid-COVID, and having no back book to think about or look at, which most other lenders were having to rigorously manage. It was their sole focus, meant that there was kind of the gap was having a funder that was open, ready, keen, hungry. That in itself was a gap at the time, sort of in early 2021, late 2020. So I suppose first thing in itself was being a lender that was open for business, and then secondly, we were quite pioneering. I'm not sort of pretending that we were the first lender to start doing things like AVMs, but we had to look at the current landscape, and the current landscape was that valuers were A, struggling to put a figure on properties, but B, couldn't actually access a lot of the properties because of COVID. So we created products such as desktop valuations, desktops on commercial assets, even, so that no valuer needed to go in the property, and they were sort of real gaps at a time where A, lenders were either not lending, but B, were struggling to lend because they couldn't get inside properties, and their sort of covenants meant that they needed to have full valuations. So we created products such as, we did AVMs well. We were doing the desktop valuations on non-residential properties, which at the time was quite a new thing. So that kind of enabled us to have a bit of a gap in the market. Excuse me as well, I've got hay fever. So when I'm snuffling, it's yes, just a bit of hay fever.
No, it's all good. It's all good. It's that time of year. What, so were they part of your early non-negotiables, or was because of COVID not being able to get into properties, they were just something that happened because of the situation? What are your non-negotiables, I suppose, at the start?
Yeah, I think they became the non-negotiables is probably a fair way to put it. They were things which, I'm never too proud. You try things. There might be certain products that we've kind of launched and tried that haven't been, they've not taken off as such. Sometimes they're a bit of a marketing play. Sometimes they are, we always want to create things that we think are going to genuinely add value. But my view is that by trying them, which we did with things like the desktop valuations on non-residential assets, it's only by doing them that, in my opinion, they became non-negotiables. When we started the business, we definitely didn't have as lofty ambitions as to what it's grown at, albeit very ambitious. I'm an ambitious individual. So once you realise that something's working, there's needs and wants for it, it's working well. And by the way, working well for me is probably once the loan's redeemed and you've got some data and MI behind how the loan performed, getting the money out's the easy part. But in theory, once we realised there was traction for it, I suppose if you were to ask me present day, there are certain things like that have become non-negotiables. When we're looking at new funding structures for the business and we're speaking to banks, etc., there are certain non-negotiables, and I suppose our products that have served as well are one of them. Absolutely.
Absolutely, no, that's good. And was there, there'll be a lot of business owners listening to this through either now or when our great marketing team puts it all onto our social platforms. When they're setting up businesses, whether that be a brokerage and all that, I think the bit that I always think about, was there a moment when you thought, this is working, we've got something here? And do you remember what that moment was?
Yeah, I'd say it was early on. I think because as sort of a one-man band setting up a business, I didn't have a team of people around me like I do today. Pretty early on, within a few months, I realised that there is something here that can really be built on. I suppose, to give myself some credit, which I never really do, but those relationships that were built over a 10, 11-year period, it was then the time to lean on those relationships. So, a lot of the brokers and partners that helped me in our early days of putting their trust in MS Lending Group. But I suppose at that point, it was purely just trusting me as an individual, because there was no foundations as such for MS Lending Group to be sort of judged upon. That was sort of the key thing in the early stages. And then I suppose, certainly within the first 6 months, I definitely sat there and thought this could become something really big, because whilst businesses have forecasts to 1 year, 2 year, 5 year, 10-year forecasts, they move. They move with time based on how you're performing. And I think very quickly within that first 6 months, it was almost a rip up of whatever the forecast was, because we're going to way exceed that. And then the focus is purely on Do we want to exceed that? Do we want to keep ramping up, or do we want to stand still? And if we do want to ramp up, what is the infrastructure we're going to need to build around this business to make it a scalable business? And that's, I suppose, what we did. I'm not, as a personality trait, I try not to get too bogged down with forecasts and long-ranging targets that are not sort of tangible, that are, not within touching distance. For me, a lot of the time, it's head down. As long as you know you're doing good things within the four walls that you're in, keep trying to do them. And yeah, I suppose that's it. And to answer your question, it would have been probably within the first 6 months, there was I wouldn't say a light bulb moment, but there was definitely a realization that there's a need and want for what we do, and we've got a decision to make. Do we grow it and really go for it, or do we sort of be extremely cautious and just sort of slow things down because it's going quicker than we expected it to go?
So you've obviously, and we have now, as you've brought me along with the journey of this, have gone for it because we were all there last year when we hit the 500 million milestone. And our average loan size is not what you'd have for the London lender, so there's a lot of units inside there as well.
Mm.
So I'm thinking, even when I'm saying that, there's a lot of questions when we'll come back to units in a moment, where I think it's
Yeah.
really key for culture. But that's a serious milestone. How has the business had to change through that growth in that time of 500 million plus?
I think early doors, excuse me, certainly first year, 2 years even, your focus is on origination ultimately, which it was. And then quite quickly, once you sort of get into your second year and redemption dates are coming around, the focus naturally shifts onto that, the back book side of things. Excuse me, which we did. I'd say, obviously, over the time, you learn a lot. The back book is really the foundation of the business, and the time and effort that now goes into that element of the business is huge. And when you're looking at the size of book that we've got now, I always look at it as that's our mortgage payment that needs paying every single month, the debts that are owed to various sort of funding capital structures that we've got. You absolutely have to build the business in different areas. So whilst in the early days it was just focused on origination with some very basic systems, good old Excel and things like that. Once we started making the profits that we were making, I was very keen to reinvest those into both people, infrastructure, systems, governance, and things like that. So watching the evolution of that side of the business from being something which was, just a business on a piece of paper in an Excel spreadsheet, has massively evolved. And I think there is something in that, because everyone has their way of doing businesses or startups. And obviously I've got this as an experience, and I know other lenders that are starting up, some of them want to build the infrastructure before they press the button to launch. So they'll get a team of people, the BDMs, they'll get their systems, the fancy systems, etc., which is fine. Everyone runs businesses the way they do. We did it the opposite way, which was, let's almost prove the concept, let's lend some money out, let's make some money, and then let's see what the sort of the uptake in it is, and reinvest that money to keep growing. And I suppose that's been our mantra the whole way through, is we'll have good years, and then we'll look and say, well, what needs improving? Is it the office space? Is it the systems we work off? Is it the personnel within the business? And we'll sort of reinvest in those areas to kind of kick us on to that next level.
So an evolution, not a revolution in that sense, and just an
Exactly,
evolving nature.
absolutely. Yeah, well, I
Yeah.
think bridging it's been I suppose lending money as a concept is not something that anyone should really try and reinvent the wheel of. It's probably the oldest industry going, and it will be around a lot longer than we are. So I suppose, yes, exactly that. It wasn't about trying to completely revolutionize the industry, but more the evolution of the business over time.
So I wanted to touch back in a moment. Max, who's much better at IT than me, is going to put up some polls in a second. I think it's really important that we start understanding what the lender is and how we can help them with some very propositions.
Yeah.
But what does scale mean to you, Michael? Because I've worked for lenders. I'm older. You always mention that I'm one of the oldest in the team. But what does it mean to you when is it bigger loan book, bigger team, better systems? What does sort of scale mean for you?
Good question. I suppose there's probably not one barometer of that. I think scale reputationally is probably one of the highest pillars for me there. something that I'll never judge us on from a scale perspective is numbers of bums on seats. I do see people talk about, we've grown the business, we've now got this many staff. Whilst, of course, that is a barometer, it's not necessarily one that I judge us by, just because, we want a successful business. We want one that's lean, one that's profitable, one that's sustainable to be around for the next 10, 15, 20 years if we want it to be. And you don't get to those levels without running the business sensibly and from a scale perspective. And often you can have a lender that's got 200, 300, 400 staff, but they might not be making that much money. So I'm not always sure that that is a barometer of success. It certainly isn't for us. But on the people front, watching individuals come in, watching internal progression within the business, that is a huge barometer of success for me personally. We do it's maybe not a sexy one necessarily for the brokers and partners that are maybe joining, but I suppose definitely for me as an individual and internally, we've always talked about internal growth and internal progression. So sitting in this office all day, every day, watching, members of staff that have started at this position, they've applied for roles within the business, in different roles and interviewed, been successful in those roles. That for me is a real barometer of success. And then reputation, like I said, both internally and in the wider market, is a huge important thing for us. So whilst awards aren't the be all and end all, obviously I might be segueing onto other things here, Jay, but obviously last week
Yes.
we won. It's always nice to be recognised from an industry perspective, because ultimately if they are an award that is voted for by, I suppose, industry peers, it means a lot, and it means a lot to the members of staff that are working really hard every day. And then I'd be naive not to say, obviously, that the loan book and the amount of money lent is really important to us. Firstly, because that's sort of our foundation, but secondly, it shows that people are wanting to work with us. So of course that is a barometer of success. But in the space that we're at, which is pure bridging, we're not doing dev, we're not doing sort of further advanced drawdowns. Growing a loan book in bridging is really difficult. So I suppose from a standing start 5.5 years ago to get the book to where it's got to have lent over £600 million, as of this stage now, I think we've done a really good job.
We did a really good job, and we just put up the poll questions here, which I can see some of the answers of, and they're very telling. I'm just going to go through that and thank you everyone who answered them as well. Well, the first question was, when choosing a bridging lender, what matters most to you? And the two answers that were the only two that had any sort of tick on them was speed of decision making, easy for me to say, and certainty of delivery.
Mm-hmm.
Pricing didn't come into this, and flexibility on structure actually didn't come into it as well. So we're going to go into our pillars in a moment. So if I just pick up on that one point there, and I think it's really something I've always said: if I had the cheapest rate in the market, you probably wouldn't need me. You could actually have a robot that could do things. So I think that us and the way that we work at MS Lending Group, you're in the office there, I'm around the country, just happen to be in MS offices today, is that the speed that we can actually make those decisions quickly. It's not an ivory towers. We're always looking to get the right answer correctly, I think, straight away. Do you want to just talk about that and why that's important to you and why brokers can rely on us for that?
Yeah, I think speed is something in our space, in the bridging space, is always of paramount importance. No one wants a bridging loan. No one wakes up in the morning and says, "I'm desperate to take a bridging loan today." It's anyone that's applying for a bridging loan is because they need those funds for something. Very rarely people want to just raise money on an asset to sit on it, because bridging relative to a standard mortgage is, of course, slightly more expensive. So if someone's applying for a bridging loan, they have already a purpose for those funds, and often there will be a need for speed. I think sometimes we talk about it, Jay, that speed can be mixed up with maybe negative connotations, with being reckless, with being, cutting corners, etc., which of course is never on the agenda. And I suppose we wouldn't have, the funding capital structure that we've got if they were how we operated in reality. But we'd also be naive to think that speed isn't of utmost importance. And I suppose from a speed perspective, that isn't something that just happens overnight. Anyone can turn around and say, we want to be quick, or we are quick. But the amount of work that goes into internal processes, constantly looking at our internal processes. Where are the bottlenecks? Where can we improve those bottlenecks, whilst also making sure that we are, that we've got rigorous sort of governance around what we do. We're not going up the risk curve by not doing certain things, but never falling into the trap of saying to ourselves, we do it that way because we've always done it that way. So always looking at those processes to see where we can be more streamlined. And going even one step further than that, Jay, is we work with third parties, whether that's valuers, whether that's solicitors. So, I identified from a very early stage that every single touch point along a customer journey, everyone has to be on the same page. So, the way we do things with solicitors, and those ones that are on our panel know, we don't onboard any solicitors without spending quite a bit of time with them coming into the office, them understanding the culture, them understanding how we like to operate. Same with our valuers, because they are an extension of this business. They need to understand what our typical turnarounds and SLAs are. And if they're not willing to be able to conform to them, then it's not going to be the right partnership. So going back to the first question, which was about principles of business, that goes all the way through to this stage. We can't deliver on any of those pillars unless we have got total buy-in, both internally from the staff that work here, but externally from any third-party providers that want to work with us. So much so that, an example, when solicitors who need to maybe on the panel, we almost try and put them off enough to realize if they do want to be on our panel, because if you want to be on our panel, these are the sorts of things you're going to need to do for us on a daily basis. This is the way we operate, which, it works fantastically well. And that's not because we're more important than anyone. That is because we're going to make certain promises to our clients and certain deliverables that we have to deliver on. And we will never, ever throw our solicitor under the bus. We'll never throw the valuers under the bus and say, well, we did a great job, but our solicitors acting for us let us down, unfortunately. You'd never hear that come from us because, as I said, everyone is an extension of us. So
I agree with that.
We spend a lot of time working on panels. We spend a lot of time working with the team internally to ensure, going back to the original question, that we can be as efficient as possible, which ultimately relates back to the speed element. And some clients don't need speed. They might ring us and say, I've got 5 weeks, 6 weeks to complete on something I've exchanged on or I've put an offer in on, which is absolutely fine. But we also see the other end, which is people that are in the notice period on an auction purchase, and there is that need for speed.
I'm sort of going to touch upon some of the other answers that were on the poll as well, which sort of fall nicely into what we do as well through our 3 pillars. But I think something that I gained really early through when we were talking and in my first few weeks was that I loved how we're set up in the sense of we target myself, who's got a big target on units. And we don't do it on pounds amount. Of course, I'm responsible for the pounds amount as well, but we look at units. And where I think that's really important is that investors' business that they give us is really important to them. Yeah. So even if it's a 50 grand deal, a 100 grand deal, that's as important as a £1 million deal for someone else, isn't it? To them.
Yeah.
That's them building their portfolio. And I think that's really important for brokers to understand that, because it's not going to be put down the pipe. We're not going to concentrate on the £1 million deal first of all. We see them as units. And that's what we've got on the boards, on the screens that we're not going to put on here at the moment. Everything's on a unit basis. And it's for you, myself, our CFO, Steve, to concern ourselves with the pounds, isn't it?
Correct. And I suppose, obviously, I will answer the question, but it's an interesting one to back to you, because I know the way I've always done it, and MS do, and we have some very sort of nuanced ways that we like to sort of target and how we target, and I'll go into that in a second. But you have worked at other places, and I suppose from seeing members of staff join MS that have been in sales teams elsewhere, I suppose my understanding is it is fairly unique the way we do it. And I suppose once you get it and you're on the inside of it, it kind of all starts to make sense. But I suppose it's partly a question back to you, Jay. Have you, is it different from other places where you've experienced?
Yes, it is. And I'm not just saying that because I receive a check from you every month. It is. There's a absolute drive from my team to service everybody and to get into the right relationships. And they're not just hunting down that massive £1 million deal because they get paid more on that. Actually, that units creates people having repeat business, because I'm hearing brokers come back to us and say, I've got a 50 grand deal. I know it's not important to you, this one. We say, no, it is really important to us.
Yeah.
We can look at it and get through. And I see that through them repeat business through brokers coming to us. again and again. It means that we don't have to burn through loads of brokers because our service proposition's right. It's actually making sure that everyone from my sales support team that I've built up, right through to the processing team and into finance, have all got the same metric and we're all aiming towards the same thing. So actually, that means that you don't have to have as many broker relationships, although I always like building on that. It allows us just to support who we are. So it works
Yeah.
really well. And an RM said to me the other day that he said, maybe if it was the other way around, I would just be concentrating on the £2 million deals and the £1 million deals and not look at them. So I think we've got it
Correct.
wired the right way, especially as a northern lender, but we do lend nationwide, which we're going to say in a moment. Now,
Absolutely. Sorry, I'll answer that, Jay. Just to sort of jump on the back of the point regarding the units. So the units, the way we do it is purely for the benefit of our brokers and partners, because I suppose it's more of a psychological point. And from there's a few reasons where the mindset is really good around having unit targets. Now, of course, like you said, Jay, from an SLT, a senior team perspective, from a board perspective, there's lots of conversations about pounds and where we are for the year, where we are for the month. But from I suppose, a sale and the rest of the business perspective, we've got big screens out on the floor, as you know, Jay, and there is no number target on any of them in terms of pounds. It's always unit based. And the couple of the key points around that is, firstly, the buzz I've found always, and I've also now from having salespeople that have been targeted very differently in terms of pounds, but the way that uh, the buzz of getting numbers, the buzz of getting phone calls, the buzz of getting constant sort of deal completed is infectious. So you've always got that element that salespeople are salespeople and they want to complete on transactions. Of course, they might want to take the glory of completing on £4 million transaction, a £10 million transaction, but ultimately, I think you'd benefit a lot more from doing, if you did one £4 million transaction in a month and you're spending a lot of the month working solely towards that transaction, and that transaction could fall away. Whereas if you're doing a lot more granular transactions but regularly repeating business, internally yourself as a salesperson, having been one myself, there is a real sort of confidence boost to regularly doing business, regularly having a busy phone, regularly having your inbox full of new inquiries. So that's kind of the first point. And I suppose, obviously, secondly, like you said, Jay, is that every case is treated with the same kind of care and attention as the one before. And we'd be very naive, or people would be naive, not to think that if you do a fantastic job on a £50,000 loan, there's a strong chance that that broker also will have a 200 grand loan or a 500 grand loan and will give you an opportunity at that. Of course, we don't want to just be known as a granular lender that does sub £100,000 loans, but we're also not too precious to turn our nose up and think, well, it's not worth it's not worth our time, because if we potentially solve a solution for a broker where their options are minimal in that moment, that should have a lasting impression on them, and can aid us in the long term. So yeah,
it just yeah, it
yeah,
just reminded me how I answered a question yesterday. Someone's asked me, "What's your maximum loan?" I said, "Well, it's advertised at 3 million, but I did complete on a £7 million one last month as well." So we'll go into flexibility in a
yes,
moment. Now, let me pull one of the poll questions into then our pillars. So our pillars are fast, flexible, and reliable. Let me throw that back to you then, because every lender should be fast. Yeah, that's the staple of bridging. Not all are, we know, but you mentioned earlier, fast shouldn't be reckless. How are you making sure, and beyond just fast with AVMs and that we're balancing speed and not making poor credit judgment? And just because it means quick terms doesn't mean that we're changing our minds later on. Quite a few bits to dissect there, I suppose, for you, Michael.
yeah. I suppose, is it from a flexibility perspective, Jay?
Well, from fast, so if we are fast, does that mean that we're making mistakes and then we're more akin to change our
Yeah,
mind later on? Because the polls wanted certainty, not just of delivery, but certainty that you won't change your mind.
yeah. I think it's really important. We've got a picture on the wall here that says sort of we are what we do, not what we say we'll do. And I think it's really easy to kind of promise the world and not deliver on it. And from an early day, anyone that's worked here will know that I've said that if we're going to put terms out, or we're going to say we do something, we do it. And sometimes that we take that too literally, that kind of, even if we say we're going to do a certain transaction, something changes which was out of our control. We're so keen to make sure that the broker's experience of what we kind of told them originally we would do, even if it's something that, like I said, that's come down in value, there's something come up at solicitor stage that would easily give us that get out to be able to say, we're now not lending X, we're lending Y, or we're going to have to reduce this, or we're going to have to up the interest rate. We try and keep to what we originally had, just for that sort of end-to-end journey staying as seamless as possible. And I think the work that your team do, and the processing team do, to ask the right questions at the outset, rather than just get as much mud to stick to the wall, and then throw as much mud at the wall to see what sticks, helps with that journey. We're very keen on conversion rates. We want to make sure that if a deal is coming in, we've asked all the right questions. And you'll know from being in the office as much as you are, Jay, the live collaborative nature of what goes on internally. So, that's another thing which I would 100% pinpoint as a huge pillar of our success, is by having staff in the office all day, every day, for the benefit of our brokers and partners, to mean that when the sales team get an inquiry from our brokers, it's not just a case of I'll put the terms out of what I think they should be, which they of course they do, but there are often times where they'll think, you know what, I'm going to go and walk across the office, go and sit with an underwriter, see if I can grab 10 minutes of the underwriter's time, talk through the deal. They might come into my office, we all go through the deal. In essence, within half an hour of that application coming in, it's actually touched every point within this business that it's ever going to touch, from salesperson to underwriter to mandator potentially, or myself. That the power of that, I would have thought, to a broker, to almost have a deal it's almost been signed off subject to nothing changing right at the outset, is really powerful. So it then gives that certainty, and it means that sort of goalposts aren't being moved, or decisions aren't being changed. So yeah, I think asking the right questions, not asking too many questions, but asking the right questions at the right time, just enables that smooth journey and sort of stops any hiccups and bumps happening in the road.
There's three areas that I always think, and I'm proud of, and we keep on getting better at. Just so this isn't a sales pitch for the team. We'll talk about everyone get in touch with me to talk about my AVMs, desktops, and all those different areas. But
Mm.
the areas that I'm really proud of is one of the words that you mentioned on is conversion. So 20 to
Mm.
25% of our dips actually turn into applications. So we're sending out good terms. But actually, up to 75% of our applications complete. So that means that we are talking about the deals. We're not changing the goalposts mid-deal, and we're actually completing on what we've said we would have right at the start. And to back that up with speed, last year we were at 21 days average for time to fund against an industry average of 54 days. And we've even brought that down this year just through processes, changes, and areas, down to at 1 month, 14 days,
Yeah,
so that is really testament to that we can be speedy with a back book that is still very much performing, and still be safe as well, not making poor credit decisions.
correct. And I think
So,
everything. Go on, sorry, Jay. You go.
no, 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 you jump in.
No, I'd just say I suppose it all goes back to sort of our, those principles, and how we set the business up. That you'd never start a meeting off with me, for example, and talk about how many, just say, well, we had this many inquiries last month, and expect that you're going to get a pat on the back, because the next question is going to be, well, how many of those turned into applications? What was the conversion rate of those applications? So I suppose it goes back to, as a business, when you asked right at the start about barometers of success, and we have very clear sort of barometers of success as a business.
And that leaves us on to sort of flexibility, I suppose, and I think that's why we can convert a lot of these inquiries, because I don't see, even though one of my favorite deals is the ones that are unsexy, something that's been bought at auction that needs a
Yeah,
quick turnaround time, that's going to be really good yield creation if you're actually doing a sort of light refurb to it. But sometimes the deals don't come and they fit in a box. So Flexibility itself, do you reckon that's a commercial judgment or just weak credit from ourselves that we're just trying to accept things?
No, definitely a commercial judgment. I think we will never ever write a loan that we don't feel is right, no matter how much money we've got burning a hole in our pocket, no matter what our target says for the month. We've had months, of course, like any business, where we've not hit target. But when I've looked at what the spread of deals has been within that month in terms of, the asset classes, the charge type, and if I look and think, wow, we've had a fantastic month with first charge loans, which we like. Obviously, we like commercial and resi, but we know internally what our barometers are. And if we've had maybe a month where we've not hit target, but the asset classes and the charge types of the loans we have written have been really in our sweet spot and our average loan size, then that's potentially a better month for me than overachieving target. But actually, we've done, we've gone quite heavy on a certain type of asset class within the month. So, yeah, I think flexibility is absolutely something that's a commercial judgment. We'll never write loans we shouldn't write, but we have always set the business up so that we have the ability, if we like something, we can write it. We have different funding pots, we have different structures. And if we get a phone call today with a transaction that we like the sound of, there is always a home for that transaction. And that's been a real importance of the business, going back right to the start of the conversation when we talked about kind of or the structure of the business and having funding lines or non-negotiables, I think was the point we were talking about.
Yeah.
It's important for me that we're not sort of ring-fenced into a situation where we like that deal, but we've agreed to our funding partner is X and they will only let us do that. Therefore, we're kind of snookered here, and we're going to have to say no to a transaction that we really want to fund. So, yeah, having that flexibility is really important.
Yeah, I think the flexibility of choosing the right funding partner, which yourself and Steve do, is crucial. But let's give a little insight for the brokers that are going to be listening to this and listening to this now. So I know what I look at, but when you get a deal that may be just outside the criteria or maybe within criteria, what's the sort of few pillars that you're looking for that so a broker can present it to you? For example, asset and what are you looking at the asset is one of the questions, and then the other pillars that you're looking at, maybe five of them.
Yeah, so I think loan to value is always important. At the end of the day, we're not solely an asset-based lender, but I think in bridging would be naive to sit here and think that the asset isn't probably the main part of that gives us comfort. Not just because obviously that's the security we've got, but ultimately the worst case scenario always is the fact that there is an asset to fall back on. So when you're looking at the asset itself, loan to value is key. We're seeing in this world now of bridging and so many entrants, etc., that certain lenders are going up that risk appetite. But for us, in terms of flexibility, we have the ability to maybe flex on other elements. If, for example, the broker suggests a transaction to us which is at a low loan to value, but there are other nuances within the transaction, then allows us to be sort of flexible on those things. And I suppose it's almost like a tiering, isn't it? I suppose when we look at a transaction, we're kind of thinking, well, the credit's not great, but the loan to value is very low, and you kind of are constantly offsetting one against the other. If a member of the sales team brings in a transaction that the loan to value is high, the credit's not great, and it's a second charge, you're kind of looking at your risk curve going, well, you've kind of hit the extremes at every level on each one of those. But if you're always looking at it from an offset perspective of client's credit, the exit strategy, the value itself, the loan to value, if you're hitting a couple of those key triggers and pillars to say, well, these two are really good, these two aren't great, it's almost just a trade-off to say, well, can we get comfortable on that transaction? There's a couple of things that are really strong here. There are a couple of things that we ideally wouldn't look at. But when we weigh the two things or the three things off against each other, there might be a landing point which ultimately gets us comfort.
When we go into reliability, which is our third pillar, I think that came out from the poll that I think reliability can be brackets deliverability as well, that they can rely that we're going to do what we say we're going to do, as the wall says, not what others promise to do. So when you're looking at reliability itself, what should the brokers expect from us once they've committed to a deal with us?
Absolutely, that we do what we say we're going to do. I think if a broker commits to a deal, I think I'd expect that they would have sort of transparent communication throughout from everyone, because we try not to make things tricky, make things as simple as possible. And yeah, I think the principal process of how we operate is massively important. And I think the sort of that ease of service and deliverability. I think we often say we don't sell bridging as such; we're selling certainty, and I think that's really true. If a broker's committing to wanting to work with us, or they've entrusted us with a transaction. The certainty that we are going to deliver on that proposition is absolutely key, because they have a client that they've got to manage, and they lose their own credibility if we don't perform. So just like the analogy before about our solicitors and our valuers, for example, being an extension of us, in essence, we are, for that transaction, hopefully many other transactions, a complete extension of the broker, and we need to perform for that broker. So your rate might be higher than someone else, that's fine. Your loan to value might be lower than someone else, which is fine. But ultimately, if somebody entrusts you to do the transaction you've sort of quoted on or offered on, I think the certainty and the deliverability, as you say, is probably up there with the most important thing that we can be relied upon for.
And I always put that down to, I think you've heard me say to my team, that it's consistency of communication as well, all the
Yeah,
way through the transaction. So I believe it's fast. If I was going to sum up our pillars, fast gets attention, flexible gets inquiries, but reliability gets the repeat business, and which is
correct.
something that we do a lot of. So I'll let Alex have that sound bite off me
Yeah,
later.
no, I liked it. I like that one. And I suppose what's also hard is just within the three say themselves. And I think with everything within bridging is, which ends with the last one, which is reliable. Everyone can say they're flexible, everyone can say they're fast. Reliable isn't something, or I suppose all of them, the proof is always in the pudding. So I think that, the truth is everyone, in bridging, you probably won't be bridging if you don't have the ability to do things at speed. But it's sort of the quirks and the nuances within each of those elements, like we were just talking about, within each of those pillars of what you are able to do, which is the differential between different lenders.
Now, I'm going to touch upon culture just slightly, because I think culture is one of those things that you only shout about all the time, culture, where if you think there's something wrong in the business, and there's not. The culture is really strong. What has been set up here in the business with sort of great work environment, everyone works here 5 days a week in there. My culture question actually comes the other angle for you, and I don't think I've ever asked you this. How do you want brokers to feel after dealing with MS Lending Group? Because
How
they
do I
can
want
experience
to?
they can
Yeah,
experience a culture through that, can't they?
yeah. I suppose the culture that I would, which I say on every sort of member of staff that we bring in, and I suppose now you've put me on the spot, how I would want brokers to feel is that they
HBD,
enjoyed working with the people that they worked with. I they look back and think they were good people, whether we could lend the rate they wanted to lend, or whether we could get to the loan to value they wanted to get to. Ultimately, the people that we have that work here have to have certain behavioural traits and characteristics, which then should have that ripple effect through to the brokers that have those touch points with them. The way we converse with them, whether that by email or on the phone, is it's respectful, it's done with integrity, it's transparent, and those are things that have a lasting impact on a broker, because at the end of the day, people buy into people. The product is the product that we are there to sell, but I always say I want the sales team to be able to go to events, and I love getting phone calls from other people to say to me, "You've got a great group of individuals." They're not necessarily saying that person's the best salesperson ever, because that's not necessarily the feedback I get. But the feedback I will get is, what great, when I've got members of staff that aren't in customer facing roles that potentially go to events like Co-op Live and the hosting brokers that they might not deal with. It could be someone from finance, but they all need to have those behavioural characteristics that they are. They've got the integrity, they've got the etiquette to be able to work with people and converse with them in a way that I would expect they should. So I suppose, yes, in a convoluted way, I don't know if it's an official sort of answer, but yeah, I want people to look back at their experience with MS and having enjoyed working with the individuals. I don't think if you get the cheapest rate in the world and it's and the highest loan to value in the world, but it was a painful process. The individuals that you worked with, you couldn't find any rapport building with those individuals. I'm not sure you would. That's sort of the foundations to build a sort of a successful long-term relationship. So I think definitely trying to get the individuals within our office to build fantastic rapport with the brokers by being good human beings first and foremost, and understanding that the brokers may be stressed, they've got things going through, but we still maintain sort of a sort of calm heads and a level way of doing things, is of paramount importance to me.
So I'm going to move on in a moment to the sort of future, and you're going to give maybe some hints towards what and teasers to what's coming on. So I'll put you on the spot in a moment for that. Now, I'm not glossing over the awards part, in the sense that I want to massive recognition to Mike, who got highly commended for Underwriter of the Year, and us winning Regional Lender of the Year, amazing, and being highly commended on Bridging Lender of the Year. My question is more, do awards matter to brokers, or is the real test what happens on the next live case?
Is that a question for me or for the brokers that are potentially
I
listening? I
suppose,
suppose,
yeah, I
yeah,
suppose
for
it's both,
me,
isn't
for
it?
me, I'm guilty maybe being sometimes of a bit of a misery. I put it down to a good trait deep down that I am extremely level as an individual. I don't celebrate the highs too high, and I don't get too low when things aren't going the way they should do. It has its downsides, and sometimes I feel guilty for the staff because we probably should celebrate our successes more than we do.
Yeah.
But the benefit that everyone gets from that is that we also don't have, I suppose, a highly emotional character in myself. But if you're asking me to speak on behalf of brokers, I would have thought that the absolutely that how you perform on your next deal it is ultimately the most important. We've seen it in here, Jay. We have a fantastic month. Unfortunately, miserable me comes along, and the next day, last month is old news, and we're now in the new
Back
month.
to
So
zero.
it is back to zero again, and that's unfortunately that's the world we live in bridging. And if that doesn't sort of if you don't like that, then you're probably in the wrong industry because that is the space, that is how fast moving it is, and that's ultimately how it works. But I think for me, the awards are, whilst I can be in misery, that for me, what the importance of them is for the team. It's recognition for me that they should be proud of that because it's all the work that they've done that they've been, I suppose, noticed by their industry peers and nominated and voted for. That I think it's something that the staff should feel extremely proud of because it's ultimately an award and sort of validation of the work that they're doing on a daily basis. So that's not me. I never want to downplay awards, even if I personally can sometimes downplay them because they are a fantastic thing that we should be proud of.
Massively.
Not the be all and end all, but I do think for staff, it's a fantastic sort of appreciation point and validation point of some of the work that they're doing.
I think they're just a reason why brokers should pay attention to us because we are getting recognised. So I think I fully support that. But it's a stamp in time. Let's move on. I'm always
Yeah,
looking forward. So on that note, that was a good segue. Here we go. We should go into this business of interviewing.
yeah.
Business has lent more than 500 million a year. Team is obviously growing. Brand's absolutely more visible through the great work that Alex, Max, and Zach are doing there as well. Market is more competitive. What comes next for MS Lending Group?
I absolutely think more of the same. I think with if something's not broke, we don't try and sort of fix it. However, we don't um, we don't ever rest on our laurels as a business. I think when things are going well, that is the time to strike again because you've constantly got people chipping at your heels that will, I suppose, keep chipping away. So you've got to keep moving forwards. What's exciting? So not giving too much away, but I think we'd be naive in this modern world not to be looking at things like AI. AI is currently something that is talked about a lot within our business. What AI truly looks like, it's not just about us sort of saying we want to implement AI, so let's start using a load of AI. We're looking at in great detail of how it can benefit the broker, how we can then, it can cut turnaround times even more, how we can get our staff spending their time on the less mundane tasks of which things like AI and certain platforms now allow you to do, but spending their time on adding value to the broker, that human touch element. And I think what's important to us as a business when we talk about AI, when we've had conversations, Jay, it'll never be as a human replacement for that human touch element, but it maybe is some internal processes that we've got. So we're looking at doing AI properly, what properly means to us as a business, not necessarily when I say properly, how we want it integrated. So we're spending a lot of time looking at that. We've got some new office space, which is really
Yes.
exciting. So obviously that will be unveiled in the next month or so. For me, as a business which is got our staff in the office full time, which regularly has clients, solicitors, brokers, valuers, etc., in the office, it's really important that we have an office space that we're proud of. So the next office is, yes, a further extension to this office, but it adds more layers of sort of colleague enhancements and propositions within that. And as ever, for anyone that's been in our offices, they'll know they are, pretty good offices, nice offices to work from, and that's something that is one of our non-negotiables. If we're going to ask our staff to come into the office, we want to make this a workplace that people are really proud of. And then we've got funding lines, our capital structure. We've already got some fantastic funding lines, but again, we don't rest on our laurels. Now is a tricky market. I'll be honest; it's a difficult landscape to be operating with and be liaising with banks in. We don't need to go into it, but everyone's seen what's gone on in the industry over the last 6 to 9 months, etc. So identifying the best partner for us, the right partner, uplifts, criteria, really understanding what does a refinance of a funding line look like, or what is best for us as a business and our brokers and partners. So we've spent a long time on that. It's not something that we never have just jumped into bed with the cheapest bank or fund that we could work with. It's always been a very long thought out process based on what we do day to day and where the enhancements could come in for us. So, and systems as well. I suppose I'm jumping here, but from AI, we have got new systems coming into play which go live over the next month or so. And all these things, even if they're internal things, they are things that should massively enhance the broker's journey when they come in with us, because there are levels of automation within it. The sort of, I suppose, the data that we get from it, the reporting side of those systems, they are, even if they are an internal thing, they're an internal thing to help our clients and brokers that work with us, so that we're more efficient, that we've got better levels of data, that we're spending our time doing the things that are important. So yeah, we've got a lot going on. We've got offices, we've got systems, we've got our capital structures going to be is going to be enhancing over the next sort of next few months in the near future. So yeah, we've got lots of exciting things coming down the track, and with that new funding, it is going to have it's going to have an impact and positive changes on things like criteria, which I know our brokers will be interested in. There's no crazy teasers. We're not going to be doing sort of buy-to-let loans just yet, but within the bridging space that we operate in, some really exciting sort of criteria changes which should further enhance our proposition. We've listened. I listened to the sales team. I listened to you, Jay. We listened to brokers as to where the improvements can come from and where the gaps are. And we've spent time with our different funding partners, and we're really excited to be able to announce those over the next few months.
And I suppose before we finish off, I just want to get a snippet from you for, speaking to the brokers out there, property investors, and then dealing with property investors. Where do you think the biggest opportunity comes in the market? Not maybe from a lender, but from an investor's point of view, which hopefully will lead itself to us then to be able to fund it.
Yeah, I think we've seen with the buy-to-let market, I do believe it's quite a tricky market. I'm not suggesting for one second that there isn't value in it, but customers and clients are wanting to. We're seeing a lot of opportunities where you're adding value. Yes, you might be keeping it as a buy-to-let asset, but you need to add value to it in the interim. The days of us seeing loads of clients just buying a property on Rightmove that's already tenanted and paying the market value for it, I find them few and far between. So because of that, there's two sort of areas that I feel has opened up. I think there is absolutely where we can help the customer add value to the property. We've got a fantastic 85% like refurb product, which since we launched it has had fantastic uptake and is performing really, really well, because we are helping those clients add value from day one. As soon as they borrow the money, they're getting an enhanced loan to value to help carry out the works to improve the asset itself, to get a higher yield, and to also increase the property's capital value. And the second thing is, because of the landscape of the buy-to-let market, buy-to-lets aren't necessarily as glamorous for everyone as they used to be. So we are seeing, I feel, a lot of opportunities of below market value transactions, below market value portfolio transactions in particular. Maybe people that have sat on their portfolios for 20 years or so that are now seeing. When I say the difficulties, I'm not saying it's a bad thing that the renters reforms, but the new norm of what goes into owning a buy-to-let property, and maybe have thought, I don't have the infrastructure around me to manage all of these properties, nor do I necessarily want to, or I don't have a family that want to inherit them. So we're seeing a lot of opportunities in that sort of below market value portfolio area where people are looking to move things on quite quickly. So we've got some exciting things coming in down the track in regards to things like below market value transactions as well.
Perfect. Well, thank you for that. I think it's been amazing hearing about obviously the controlled growth that we've had since the start. How stronger relationships still matter as much as any time that we bring in any automation, AI, and all that. It's just to try and make the customer and broker journey better, so we deliver. So that's amazing. Anybody that wants to get in contact with us and my amazing sales team. I'm contactable in a lot of ways. A lot of you already know me, but whether it be through LinkedIn, through our inquiries, email on our website, there's lots of ways. But in true fashion for MS Lending, I want to thank you, Michael, but we're fast. So I'm going to give you 3 minutes of your time back, guys. Yeah, we don't need to take up the full hour of your time. So thank you, Michael. Thank you, everyone, for listening. And anybody that wants to reach out, I'd be happy to help you with your deals. Cheers.
Perfect. Thank you, everyone. Cheers.